What's going on? Back to another trade recap. Well, not trade. Oh, we can do a trade recap. This morning I took terrible trades. Should have full ported on CPI because that would have worked, but I wanted to trade the retracement back to the equilibrium. The equal, whatever it's called, of the of CPI news candle, which it did not happen. And so what I've been trying to find is a second confluence to enter a trade based on this Fibonacci level. And I was doing like the 5-minute fair value gap lined up with the low volume node. And it was working sometimes, but not all the time. But what I have found is that I was using this completely wrong. The fib tool, I was using it completely wrong. So let me come down here. What you have to do, let's actually do it the opposite direction. Ignore this yellow one. So here's what you have to do. There are technically, this is the golden area right here. Okay, how do I make the middle? Here it is. This right here is the golden area. Okay, and what you want to do is you would take trades based on that area. Yeah, usually, right? Because I've been noticing price will be up here and it'll be chopping around. Then it'll come down, maybe like do one of these. And then it'll do one of these. Then it'll do one of those. Okay, that's what it's been doing. And what will happen is I can't get in the trade right here because my usual level was right there, right? We have a 30-point stop, right? And so I would get into my level and then just immediately stopped out because you see it hit the 30 points. And that's what was happening. And I had it correct. I knew it was gonna go up and everything lined up. But my entry is just so bad, or it wasn't just not correct. And I shouldn't have to risk more than 30 points for a stop loss. If I have to risk more than 30 points, it's not a very profitable strategy. Not a very consistent, it's a bad RR. If I'm having to risk like 50 points per trade, I'm not going to get good RR on that because they're so big. The trades are so big. Also don't want to be risking that much. Anyway, so what I learned was I needed a secondary confluence, and I was looking at some people try to go down to like the 1 minute, and then they try to get a 1 minute. Okay, it's lagging. They try to get like a 1 minute inversion, like after it taps a level, like for a 1 minute inversion. But what was happening was it would do like the inversion like right here. My level would be right here, right? It would come down here. There'd be like an inversion right here. It would invert this, then go lower, and then like it would invert, but it wouldn't respect the inversion and go higher. It would come all the way back down here, and then it would go higher. And so the 1 minute inversion thing wasn't working. So. Dang, why do I keep yawning? Anyway, so I have found, I think, I have found the correct confluences and the correct usage for the fib tool. If you use the fib tool correctly, you don't have to risk, you don't have to risk anything at all. Because usually, price will come down here and tap this, but it will tap this, but it will respect. Let me undo all this. Undo. There we go. What price will do? It will be coming down here, right? And it will have a wick that comes down here, right? But then the body of the candle will be like right here. That's a really fat candle, but it would do something like that. And then maybe the next candle is like a little bit lower, but then eventually it will do this thing. And then if it's really good confluence, it will do like one of these. And it would just blast off. And this was already part of my previous backtesting that I noticed, was once it hits this level, it usually comes up all the way and hits this level. Like I would say 8 out of 10 times it does that. Maybe 7 out of 10 times. Which is oh my gosh. Which is most of the time. So the confluence that I've discovered that we're going to be backtesting, which I've backtested already a little bit so far. We're going to be backtesting it more though, is the 50 EMA. Okay? The 50 moving average. We will use the 50 EMA as our confluence. It also helps us determine bias as well, because if like this, as soon as it breaks through, it's kind of like an inverse fair value gap, to be honest with you, but it's dynamic. As soon as is this market open, let's look for a better opportunity. Like this. Once price breaks through this, you want to be looking for you put the fib tool on. You look for this golden zone, right? The golden zone, which is right here. That's the golden zone. And this all lines up. It just broke through here, so you're expecting a retest to go higher. It's in this golden zone, and then what you can target is, well, we used to do just what I regularly do, which would be we target this. Yeah, we can have smaller risk because we're not expecting it to come all the way down here. If it comes all the way down here, then it's definitely reversing or continuing lower. So we can. This is a great 2 confluences, plus it helps even more if you line up with a low volume node. There is no low volume node right here because this is old data, so it's all this data is already filled in, so there's no longer a low volume node here, but I'm pretty sure there was when this came out. I mean, you can see one right here. This might no, I think this is actually the accurate data, because of, I think it's only visible. It's only doing the visible data. So technically, oh yeah, there's a pretty deep low volume node right there that it lined up with. But I want to experiment with targeting this instead. We can get really good RR targeting that golden zone right there. You can see it respected right here. I was playing around with it, and sometimes price like to respect this area. Just something I was playing around with earlier today, but anyway, That was me explaining the strategy a little bit. That we're gonna be backtesting until 12, so we get like 20-ish minutes. We might go over. I'm really tired. I mean, I'm yawning like crazy. Oh, here's the fib levels. You don't need these two. You really don't need like a lot of those. Really, all you need is you can just look at them right here. Really, all you need is probably, I mean, technically, all you need is these two. If you're going long, you really only need these two right here. 0.618 and then the 50%. But these are other key levels right here that I've noticed price will wick into sometimes, or maybe it comes all the way down, but it likes to respect the green levels inside of them, which is the equilibrium of those levels. That's why they're in green, because they're important. And then also, if you want to, oh my goodness, bro, that's like the 6th yawn I've done. The red ones are for take profits. Is what I did on the old strategy with the fib tool. I think I'm still gonna target that just to be safe, especially if I trade in more in December. But yeah, if it's short, you target down here, and then if you're long, yeah, you always target the 0.298. Anyway, I got this idea from just a random YouTube video that I was finding, because I was like, bro, I need another confluence besides just 5-minute and low volume node, because I wasn't like, there was nothing that indicated that it was going to continue going up. I like this this moving price, the average, the EMA, because it's like mathematical, so it's algorithmic. Same with the Fibonacci level, it's also algorithmic. It's all math. So with the low volume node, it's not like, it's based on order flow and math. It's not just based on it's more robotic. It's not me thinking, oh, I have a feeling it's gonna go up. It's proven, proven areas that have a higher chance of doing what you want them to do. I don't know how to explain it, but I think you'll understand. It's more robotic, mathematical, instead of just liquidity. We took out liquidity, if you know what I mean. It's more robotic. I like having a detailed strategy that I can follow and not have to think about. I mean, I kind of still need to think about it, obviously, like where the low volume node is. But it's nice and mathematical. Okay, so what I see here is a 5-minute gap. Okay, a lot of stuff. We have this support zone right here, probably. We have this 5-minute gap. We have this low volume node, and we have the EMA, and then we're gonna see where this lands us. Might go a little higher here because, oh, that was on the 4-hour. Wait. Oh yeah, that was on the 4-hour. Never mind. Delete all this. This is not. Let me skip this ad. Can't skip it, unfortunate. Hold on. Okay. What do I see? I see some trend line liquidity, even though I just hated on liquidity. Right there, you see that? Price is gonna want to take out that. Most likely. So I'm gonna go for longs here. Because we just edged liquidity, which is another confluence of mine. And key levels down here. Okay. Also, we're gonna wait for a close of the candle. We want to see rejection off of it as another confluence. So based on this, it's not looking great, to be honest with you. Yeah, see, that's a close past it, so we can go for shorts now. And you see, it's, I don't have to guess. I think this is a valid short here. It's in this key level. And we edge this liquidity down here. I think this would be a valid short. 30-point stop. Let's target this golden area. It did the thing. It did the thing that I was talking about. Too high of an entry. We need to make sure we entry on this level here so we can minimize our stop. Look at that. If we would have minimized our, if we would have entered on the correct level and targeted the red level as per usual, we would have hit a 1 to 3, would have hit a 30-point trade right there. But because of my I'm just not patient enough. I'm greedy. I want to get into the trade as early as I can. And I'm worried that if I don't get into the trade, I'm gonna miss the trade, which is FOMO, which is not good. So from now on, the rest of this backtesting session, which is like only gonna be 15 minutes ish, we're only doing we're following our plan A+. And not getting on bad entries. Although that was not a very good trade, I think I want to see a further breakout. Let's actually continue trading this day. Yeah, I want to see something like this. This is good. Let's see if this would have hit. Let's see. Nice. Nice. Okay, this is a good entry, I think. It's okay, listen, hear me out. It's because we're hitting the EMA already. We're already tapping the EMA. Once we tap the EMA, it's a good trade, I think. Yeah, you see? Let's see if it goes higher. Okay, yeah. The EMA has a very, very strong, I think, reaction off of it. Especially since we saw this reaction already. I think that's a great trade. If we close at the EMA, we close above it after tapping it. That's very good. How many points was that? 50-point trade, and we went in 2 points of drawdown. That's pretty good. Next day. So we would have ended green there if we kept trading. Oh, also I blew an account today on CPI. I mean, here's the thing. I hated December price action. It was pretty terrible. If I was gonna do any good trades, it should have been earlier in the month because price wasn't as bad. But as we get closer to the end of the year, price is just getting choppier and choppier and terrible. Not as good as, it's getting worse. So, today, CPI was like the last big news drop, I'm pretty sure, of the month. CPI, no news there. This is pretty big news. But our count should resume on here, and we should have CPI somewhere right here. There it is. That was PPI. Oh, there's CPI right here. January 13th will be CPI at 7:30, and we can take a trade off that. Hopefully, it's gonna be better price action. Okay, I will be profitable before the summer. Okay, before the summer, I will be profitable. I'm saying it right now. I'm putting a deadline on it, even though I'm not supposed to, because I am confident. I'm gonna figure this out. It's been almost a year that I've been trading for almost a year. That I actually started taking it seriously. I started trading last October. By literally all I did was I had Bollinger Bands, top of the bottom, and I had an RSI, and it was like the first video I looked up on how to trade, and it was, if the price is at the bottom, the lower Bollinger Band, and RSI is low, relative strength index is low, then it's probably going to go up to the top Bollinger Band. So if this was low and the Bollinger Band was tapped by price, I would go long, and I risked, I think I put 300 of my own dollars, my own money, into an account, a live account, and then I traded that, and I lost a lot. Oh, I lost like all of it. I didn't lose all of it because I was risking like 1 micro, I think, and I was so anxious. Whenever I see price move or drop, I'll be like shaking, feeling my heartbeat. I'd get out of the trade. Yeah, so then I took off. I was like, I lost so much money. I decided to stop trading after I had literally just started it. And so I took like 2 months off. And then I got back into it seriously, and I devoted to 3 months of practice. And during this practice, I was extremely profitable. I don't know how this happened, but I was making 40K a month on practice, of course, on demo. I journaled every single trade, like detailed journaling. I had like a spreadsheet that I entered all my trades in for 3 months, and I was making, for 3 months in a row, I was making 30K a month on demo. Now, I was scalping like a lot. I was just pure scalping. I didn't understand the market at all. All I did was like trade off fair value gaps, and I would risk high. And so if price moved like 10 points, I'd be up like $3,000, and I'd get out of the trade. And I think that kind of boosted my ego a little bit, because of course I thought I was good. I had 3 months profitable, but I didn't know that I had a bad psychology. And so then I started trading evals in April of this year, and I blew 2 in 1 day. I was trading Apex. I did Top Step first, and then I did Apex, because Apex has a cheap, their accounts are cheap, but their activation fees are high. And so if you like pass the cheap account, then you have to pay the activation fee. So technically it's really expensive, but it's the cheapest. If you're gonna blow an account, then use Apex. But if you're gonna try to get it funded, then don't use Apex, because their rules are bad. Anyway, I have an Apex account right now that I passed earlier this year because I was using it. But anyway, passed 2 funded accounts in 2 days, and was eligible for a payout in this current summer, and I didn't take the payout. I could have had a payout. I didn't take it. I wanted more. I got greedy, and then I never had a chance to get the payout again. And then I blew the account. But I still have another account that's been profit right now. But yeah, I just yapped for a long time. Anyway, this is not about me. This is about back testing. But anyway, where was I even going with that? I just like explained my whole trading career. Oh, anyway, what I was saying was, I will be profitable before this summer. You can count on it. You can count on it. And even if I'm not profitable, that's fine. It's not gonna stop me from. Bro, I'm on the 4 hour. Oh my gosh, this is gonna be. This is not right. Okay. Okay. Let's see if we took out any liquidity. Not really. We're already at the peak. But we did kinda right here. There's a 1 minute IFEG. You could probably count on shorts. Ooh. Maybe we go for a retracement back up into that. Okay. This is an A+ trade. We respected this. And we just tapped this. Ooh. Ooh.
This is an Etsy holiday ad, but you won't hear any sleigh bells or classic carols. Instead, you'll hear something original. The sound of an Etsy holiday.
So, here's what I got from that. We got that initial reaction right here. I don't know if you can see that. Now we pushed up like 20 points, but then we continue lower. Yeah, and I think that was because we took out this high, and that was pretty strong shorts right there, in my opinion. Because that's when liquidity does come into play. This is a good short. Oh wait, also, I wouldn't be trading most of January. My school that I'm going to, this new school, new college, the class is only 6 months long. It's like an apprenticeship. Can't say it. Apprenticeship type trade school. Not an apprentice. Okay, whatever. It's like a trade school, not trading. Like, it's audio. But the class got pushed back a week. Dang, the same week as CPI. It got pushed back a week. Instead of starting on the 5th, it's starting on the 12th. And so for the next few weeks, instead of starting at 10 a.m., they're starting at 9 a.m., which it takes 30 minutes to get there. So I have to leave my house at market open. Which obviously is, I think it'll be good. I'll take this month off. Then I'll have February, March, April, May. Then I think I finish in June. Finish at the end of the June. Yep. So I think that'll be good, taking a little break off. Now, I want to see price. If we don't take out this low, take out the low. Now I'm bullish. Where mark this low volume node. This is a good spot for a 1 minute inverse. Okay, let's see if this would have worked. Let's see if this works. A little bit of continuation trade there. This is a big dump. How much liquidity are we going to be taking out here is the question. Low volume node is right here. I can't even see it. Interesting day. Did we ever take a trade here? I don't remember if we did or not. Yeah, this is a weird day though. Let's try going on the 1 minute chart and seeing if it's easier to trade on the 1 minute chart or harder instead of the 5 minute. Because that is something we need. I would prefer to try on the 1 minute so we can get faster entries. Or more precise entries, I mean, not faster. Bro, I'm so distracted. I don't know if you can tell. Alright. Alright, market open. Instant respect of that. We don't take any trades off that. Look at the 5 minute for some low volume nodes. I see one about right there. Looks like we might. Interesting how different the two EMAs are. The 1 minute is so much higher than the 5 minute. And look at that. Interesting. Look at this. So the 1 minute, we were nowhere close to the CMA. Like 50 points probably. No way I get this right. Okay, we were 7 points away. That was not even close. But on the 3 minute we did tap it. On the 3 minute we tapped it. In this area, but there's no low volume node. On the 5 minute we already been tapped it. We've already been tapped it. On the 15 minute, okay, yeah, this is. So I think we get a more accurate. It seems we'll get a more accurate thing if we trade on the 3 minute. Rather than the 1 or 5 minute, because like the 5 minute's too extreme, the 1 minute's too slow. The 3 minute seems like just right. If right, that's what I'm seeing. Sneeze. I am so hungry. Check our Pediasure. Let's continue trading this day and see if we can continue getting another trade. Looks like we might take out. Oh. All right. I'm expecting some bullish reaction here. Interesting. I am expecting some type of reaction here, though. Let's check this golden zone. What do you know? Very center of the golden zone. Do we hit TP right there? Look at that. Look at that trade right there. Does it go higher? Oh, interesting. Okay. Let's see if a short here would work. We have a little bit of low volume node. We just tapped it. On the 5 minute, we just closed above it. On the 1 minute, we already crossed it. So it does not seem likely this will work. It doesn't seem likely, but let's see if it will. Wow. Wow. It did. Was there a 5 minute gap? There was a 5 minute gap up here, but I never even tapped it. I'm telling you, look, it just loves this area. From here to here. You can see price tapped it right there, and then it came all the way. It even came down to the golden area that I've marked. Look at that. Literally directly on the golden area. And then it closed right here. It tapped the gold, but respected this key level. Wow. Okay. That's fascinating. Let's go to the 5 minute and check out any low volume nodes that we may be seeing. We have a big CPI wick. Big old CPI wick. And we just took out these lows. So it's looking pretty bullish. I'm being honest. But it does seem like we're running into this issue right here. No, that's not a valid trade for me at all. Not at all. Yep, look at that. So we love to see. Fantastic. Now we want to see. There is no low volume node though. Let's check the 5 minute. There's a 5 minute low volume node. And a 3 minute. And I mean a 1 minute, but no 3 minute. Okay, that's valid. So we have a low volume node. We have this. Okay, it looks like we are coming to this low volume node at the. This seems like a trade for me right here. Just target that. Go for a 1-to-1. Bang. Great trade. We recognized the low volume node. We recognized the EMA. We had some great rejection off of it. Fantastic trade for a nice 20-point scalp right there. Now I'm assuming we might go lower here. No, we go higher. Wow, look at the support. Look at the support. The support is crazy. Swing low. Let's see this bad boy. We're in a low volume node. Okay, we're touching tips right here. Let's see if this works out. I have a feeling that we're in the premium, so I feel like we want to go shorter, but we did just tap that. And there's a 5 minute gap. Wow. 1 minute's looking like a swing low. We are in the premium. I mean, to be honest, I would expect price push lower. After it's retried this multiple times, I would expect it to go lower here. Wow. In a crazy turn of events where we might take profit. Wow. Wow. Okay, that was a terrible trade though. What time is this? Is this 10 a.m.? I mean, not a terrible trade. Time-wise. What did I say though? We hit this area again. And then we shot all the way up to the other one. Alright, hold on. Okay. Don't know, that's much better. Wow, though. Look at that. How many wins is that today so far? We've only taken one L, I think. I'm very, very satisfied. Here's the thing, though. With backtesting, I can quickly go through the day, and like a big move like this doesn't hit me as hard. But when I'm sitting there for 3 hours just looking at it, I get antsy. You know, I want to press something. I want to feel the adrenaline of hitting buy, and then watching the number go up. You know, it's not good. You don't want to do that. Obviously, I just hit the mic. And I recognize that, which is good. It's good that I recognize it. But I know I need to be more patient. Not as antsy. I think my psychology is, since I have to trade so little in the morning, but school has been starting at 10 a.m. So I get up at 8:20. Get up at 8:20, sit in this chair, wake up, do my analysis for the morning, and then I would trade until like 9:30-ish, and then leave at like 9:45, 9:50, and get to school by 10. Yeah, and since I only have an hour to trade, I've been thinking to myself, like, subconsciously, that you need to get a trade in, because you're not going to be able to trade the rest of the day. You don't have time to wait for a setup, so you need to try to find a setup. And that's the wrong mentality I think to have. Also, I just noticed all these highs right here that look like they want to be taken out right there. And I recognize it's the wrong mentality to have. I need to be waiting for a setup. Even if it takes a week, it'd be better to take one trade that's winning than like 5 trades, win 1, win 2 even, and lose 3. I mean, yes and no. I mean, if they were valid setups, it depends on the situation for all of them, but yeah, man, it's definitely challenging, and it's not for, oh, look at that, we're gonna take this out right here. It's definitely more than you think it is going to be. It's definitely more. It's definitely not as fast as you think it's gonna be. Most people, I think, me too, I got in trading, I was like, oh, this is gonna be so easy to make money off of. I can just find an indicator, you know, and that will tell me when to do it. I don't even have to learn it. Or I don't know if y'all got into this. I was into copy trading, so I would like there's websites where you can just signal bot, and I think I got on a crypto app that is literally just signal bots, and you just, when the dude tells you to buy, you can like look at their win rate, and then you hit notify when they take a trade, and they just tell you when to buy, and then you do it. And that's not a bad strategy, I don't think. But it doesn't feel good. It doesn't feel good to just copy somebody. You need to learn it yourself. And I think I'd rather go through the pain and learn it myself than copy somebody. I would rather put in the work, learn how to do it myself, and then it feels I don't have to rely on anybody, because I feel like that's the reason why so many people do trading, is that you don't want to have to rely on a boss, or you don't want to rely on a company. You want to be able to work for yourself. You want the freedom, and it kind of takes away freedom if you're having to check your phone for signal bots constantly. In my opinion, which is always correct. So check the 5 minute for some low volume nodes. Perfect. We got one up here, although it's pretty high. We trade on the 3 minute. Looks like we already did a pretty big. Maybe we get a retest. But we just hit the low volume node. Okay, I think this is a valid entry right here. Wow. Wow, like it's no longer valid because we already. Actually, we haven't tapped it yet, to be honest with you, but I don't think this is valid. This is gonna lose. There we go. Yeah, that trade was right here. It was this short. Right there. Right there. When we retested this area, when we retested this, wait. Yeah, when we retested this area right here, that was the trade right there. Why is the volume so low? It's only 15. Usually it's like 30-ish. May 17th. Oh, it's a Friday. That might explain it. Yeah, tomorrow though, I don't think I'm gonna be taking any good trades. I might not. I might just trade on. I'm not taking a trade. I'm gonna go ahead and say it. I'm gonna trade on a fake account, on a paper account. I want to get some practice in for the rest of the month. We can just practice. Also, look at this background. This is kind of crazy. Anyway, let's do some more back testing. We're already 15 minutes over. That's a short position if I've ever seen one right there. We're in the key area and we just tapped it. Oh my goodness, this is a short. Why is the volume so low? Bang. That's a safe. If you want to go risky, you can go golden. Go for the golden. And risky would have played off. Look at that. Risky would have played off that in that situation. How much would it have played off? Dang. Could have retired. What is that RR? 9 RR. You could have gone in with 20 RR on that trade and still would have hit. Look at that. 20.6 RR. Diabolical. Now, I think we break out potentially right here. Yep. Look at that breakout. We're going until 12:30. Then we're ending stream at 12:30. I wish I could like put it on the computer to automatically turn off the computer at 12:30. This is the most I've ever back tested in a month, though. That's good. It's like 14 hours of back testing, which is pretty good. Means I'm putting in the work. If I put in the work, consistent, it's got to pay off eventually, right? Right? Eventually, got to pay off. I keep putting in the work, keep practicing. Eventually, it's gotta yield some results. 8:30 bias. Let's see, we had a rejection at this 4-hour Ferrari gap. And there's a big low volume. No, that's the fair value gap. But I don't know. Let's see how the 5-minute looks. 5-minute looks pretty bearish. Down to like here. To be honest, I'd be targeting this inverse as a 3-minute look. We're looking at the shorts right here. Ooh. Interesting. Very large push up. 1 minute is inversed, but I think this is. Let's not take this trade, but let's see what would happen. Fantastic idea, Anderson, by not taking that trade, because we never had a tap, and we want to see rejection off of a candle. We want to see it show some signs. Okay, we need to go up it. We need to like hover there and then like push up and like do that thing. Which is excellent because I had a feeling we were going to be bullish today. As long as we don't go to all-time highs. If we hit all-time highs, then we gotta get off. We do not trade all-time highs. I have a feeling it's going to smack it right now. Right now. There we go. And now we no longer trade for the day because of that. $12.20. I'm freezing. Why am I so cold? Oh, I have 2 fans on. That's why. Alright, we're not all-time highs. Oh, we're not. We're dumping? Ooh, we just filled in this for value gap? That's a little weird. But we might inverse it. We might inverse it. Let's see what happens. If not, the draw is going to be obviously this low right there. Maybe even this low right there. But that's a little close to price. I also need to brush my teeth. It's hurting. My teeth are hurting. Little side note. Alright, so we just took out this low. And this is probably a pretty high draw on liquidity to go up. To be honest, is looking very bullish to me, so I'm a little hesitant to take a trade here, if I'm being honest. But there's a low volume node. And this does technically line up. This is great. We just saw a touch right here, and we saw a close. We take our short right there. We go for big. We go big. We go big here. Looks like we should not have gone big because it did literally hit our TP right there. Without going big. So, bad trade there. I thought we were going to be bullish anyway. I don't know why I went for shorts. But I think it's very high confluence if we go, oh my gosh, this right here. Ooh, we didn't come down far enough. This is a weird trade. I think it's gonna inverse here. Yep. Interesting. Weird. It's being weird. It's being really weird. Ooh, wait, what if you did this? Let's just line up. Just hits equilibrium. Nothing special. Can I make these a little thicker? There we go. Can I make this hot pink? We'll stick to it. This is way past trading hours, so it's gonna be slow. We're just slowly grinding up, so it's not even worth trading. Environment is looking very bullish. Very bullish. 3 minute. Let's see if we get a retracement down to that. Down a little bit. Perfection. Get a repush. We did not. Low-key don't know what to do here because it's so close. We're gonna get a breakout here in a second. Super choppy. Here we go. Here we go, here we go, here we go. This gotta be it. Look at that big candle push down. Having that 1053. Come on now. Right there is our entry. We literally closed right at it. We'll be risky on this one. Ooh. Okay, here's what I think I'm doing wrong. I think this is the same thing that I did with the other strategy. I'm going against trend. It's clearly going up right now, okay? And then I see one big push down and I think, oh, okay. Now we're switching biases. Why would we be switching biases? We had one candle pushed down. That doesn't mean we're switching bias. Now, I was thinking this would be the reason why we'd be switching bias, because we just invert this. We're going to re-tap it. The angle sort of starts like right there. Like right there. And so my entry was right there, but it's not how fair value gaps work right here. The fair value gap wants to fill in. It wants to fill in this entire area. So it filled it in. And then it was like, oh, okay. We got this low volume node right there. Okay, now we'll push down. Now we'll push down. And now I think would be valid to take shorts. Is this valid? This is really sketchy, to be honest with you. Real sketch. Dang. Why was it sketchy? Come on now. You get the accumulation. Alright. You got the... Well, that would be up. That wouldn't really work, but... Why would it be sketchy? You just had a big reaction off of this key level right here. Key level right there. You just had a big reaction off of it. You come down, you retest it at fib level, and you push down further. And you could have gotten super risky with this one. This is target that low. Dang. Alright, that's gonna be all for me. It's 12:30, look at that. Peace.